Hello, this is Rick Cortez. I'm co-CEO of Broadmark Asset Management, and this is the July 2023 update on the Westwood Broadmark Tactical Growth Strategy. And today, I want to highlight investor sentiment. Both are short-term and intermediate-term models of investor sentiment have gone negative. That is too much optimism, which is negative in our work. And most surprising, at least to me, is that the retail investor is back in the market. The AAII poll, that is the American Association of Individual Investors, has shown the most optimism in 2 years. And it's not yet negative. It's not yet at an extreme because it's coming out of the basement. The retail investor has been out of the market. Nonetheless, we have to say that investor sentiment has now turned negative. And that joins valuations as negative and monetary policy as negative. And therefore, we have our fundamentals negative across the board of the three fundamental pillars that we follow. However, as we all know, the fundamentals can be terrible and the markets could soar, or the fundamentals could be terrific and the market collapse. That's happened many times in stock market history. That's why we have a fourth pillar to the process, which is momentum. So what is momentum telling us now? Well, momentum is getting better. Breadth is widening, more stocks are participating, and most importantly, volume is coming into the market. We are seeing more upside volume than downside recently. As a result, we have increased the exposure to the market in our separately managed accounts. So we're now 50% in large cap stocks, the S&P 500, in our separately managed accounts, and 50% in 1 to 3 month treasury bills. And as of the end of June, the 3-month bill is yielding almost 5.5%. We would increase our exposure to the market if interest rates declined, if investor sentiment came off the roof, and if our volume and breadth models continue to improve. We would reduce our exposure to the market if credit spreads widened, and this is very important. Credit spreads have not widened during this cycle, which is good for the market. But we would reduce exposure if credit spreads widened and if our measures of volume and breadth deteriorated once more. So we are cautious in view of the fundamentals. However, when the fundamentals differ from momentum, we go with momentum. Why? Don't fight the tape. Always be on the right side of the market. Don't make the big mistakes. And I'll leave you with one last point. June marked the point at which the market had risen 20% off last year's October bottom. Market history tells us that, again, on average, after a 20% rise from a bottom, it usually doesn't stop there. In terms of time, maybe another 3 months. In terms of price, maybe another 10 to 15%. We don't know that that's going to happen. We don't predict. We adapt to the market. But I just want to say to those people who are looking at fundamentals only, you might be making the same mistake or the mistake of saying, I'm right, the market's wrong. And I'll just leave you with my favorite quote from John Maynard Keynes. That is, the markets can remain irrational longer than you can remain solvent. So with that thought, I hope all of you had a great July 4th holiday. Please join me next month for the August update. This is Rick Cortez. Thank you very much.